Hi everyone, welcome to another Port Jackson Securities webinar. I'm your webinar host Caitlin Chung, and today we are fortunate enough to be joined by CEO Herbert Koeck and CFO John Neild from Titomic. Thank you so much to you both for joining us. So today we're going to go through, but before we do so, to everyone watching, feel free to pop in any questions into the chat box and we can go through them later. But let's get into it. So I know many of the investors on this webinar today are quite new to Titomic. So could you give us an overview of your cold spray technology and what problems it solves?
Certainly I can. And first of all, thank you very much for having us today. Now, for those of you who know Titomic, I'm sorry that I potentially repeat what our technology is doing at the end of the day. What we are doing with our technology is that we are taking a metal powder, we literally accelerate that metal powder to supersonic speed, we push it out through a nozzle, and when that metal powder stream at that speed goes against the substrate or a scaffold, the particles start to bond with each other and form a metal. Okay, a very interesting phenomenon. Now you will ask yourself is what can that be used for? And basically as a starting point, it can be used for as a coating technology where you can coat metal onto metal or other things. But at the same time, if you do that same process layer after layer after layer, a couple of thousand times in a row, you can also start creating three-dimensional structures. So it's a coating technology on one side, and it's a way for additive manufacturing of metal parts in a sustainable process because we are using the speed of the particles versus traditional processes which are around melting the toner particles.
Okay, thank you so much for that overview. And Herbert, you joined the company a bit over a year ago. What are the key changes that you have made in strategy as the company commercializes?
It was a very interesting ride in the last 14 months, I would say, and I think John can confirm the story we have gone through. At the end of the day, if I summarize what we really have done for the last couple of months, that first of all, we started to focus. And we moved basically from trying to chase hundreds of solutions and applications in the company. We zoomed in and said, where is really a sweet spot of the technology? Where do we have engagements with customers already? And then we zoomed in on less than a dozen of application and use cases. So first thing, we did a focus. As soon as you focus, you can easily understand is if you know the customer then better than before, if you know what problems they have, you also can start to create a value proposition. Suddenly we were in the situation that we could say is, hey, if you are the customer and you have that problem, I have a technology on the other side. How does my technology solve your problems? You're creating a value proposition. Okay, and that's what we could articulate, where we could then gather data around the value proposition we have. And obviously these data are convincing customers because it shows them a monetary benefit when they use our technology, what they get out of it for their business. And at the same time, it also helps you to get in front of the right customers. Okay, because the challenging part with 3D printing is it offers you so many possibilities that it's that easy that you get distracted by talking to literally hundreds of customers where each of them has their own problems, and then you lose sight of the real strength you have with your technology. So number one, focus. Number two, create a value proposition for the customers which are in focus, and then work with these customers and show the financial benefits. And with that one, you can commercialize and generate revenues.
I think you've got a really great business model there, Herbert. So you definitely have added a really great addition to the company. And in terms of the joint ventures with Repkon and Neos, in terms of what, can you explain a bit about what each party brings to the table and their potential revenues?
Absolutely. And let's get us grounded. Okay, one part of the exercise which we have gone through in the last 14 months is also to articulate how do we want to create revenue and business for the company. Okay, and one element is to get clarity is where is the revenue coming from today, but even more so in the future. And we were very clear that we identified 5 distinct revenue streams, and I'm not going to comment on all of them, but I want to highlight 3 of them specifically. One revenue stream will be, and is already today, a big part of the revenue which we could achieve in fiscal year 22 is by selling our machinery to customers who have a need for these kind of products. Number 1, selling machines and the related services and maintenance, but also the metal powders attached to it. Second one is also that we are producing parts in our service bureau here in Melbourne, but also in our Dutch organization and in the future also in the US, where customers are coming in and saying, hey, Herbert, Titomic, can you produce this part for us? We validate it, we check it, we make a quote, and then we produce it. And third, and very important, is now around the joint ventures. As soon as we have a clear understanding that our technology is helping customers to get the technology into manufacturing, to produce a lot of these parts, we want to engage with these customers in a joint venture. And the joint venture, why? Because of, I don't want to wait until we have built up the go-to-market for ourselves in that certain industry, until we have all the know-how about these certain industries. And when I'm saying certain industries, I mean, for example, barrel manufacturing or tooling. We want to team up with experts which exist already in these industries. Okay, and 2 experts we have found and which are teaming up with us, for example, Repkon on the barrel manufacturing and is NEOS on the tooling production for the aerospace industry. So teaming up accelerates the revenue generation for us and also adds a toolbox in their existing setup. And with that one, they can bring innovative new products to the market, which otherwise without our technology, they couldn't do so.
And since joint ventures are your favorite go-to-market model, as you just said, should we expect to see more of them?
First of all, let me put that into perspective. Okay, while the joint ventures is an important element of our revenue generation for the company going forward, it's 1 out of 5 revenue streams overall, but an important one. Should you expect more of this? Obviously, okay, because we are not stopping basically with the 2 joint ventures which we have established during fiscal year 22. We are currently working on a few more on a backlog out of that one, and we will disclose appropriately at the point in time when we have these joint ventures signed and when we have material information on what these are. You can imagine that as we have gone into these industries, for example, like tooling, the immediate and the natural next step is we go for other tooling companies. Same on the barrel side. Obviously, as we have this expertise now with Repkon, the next step is to multiply and get on other barrel manufacturers and approach them because we know what we are doing and what the technology can bring.
And so I know the company made 2 acquisitions, Tri-D and Dicomet, during FY22. Can you explain more about what they have added to the business?
First of all, yes, I can explain, and they have added a lot. Just to start with, if you think about it, why do you want to get an acquisition? At the end of the day, you want to bring something to the company which you didn't have before. Okay, that could be either related that you're talking about people, that could be related to intellectual property or processes, that could be related to a geographic foothold, so that suddenly you are enabled to talk to customers in a certain geography, which beforehand you only could do remotely. For example, if you talk out of Australia to talk with customers in Europe or the US, or you want to bring in also certain skill sets of people. Ideally, when you do an acquisition, contributes to each of these elements, but both of the acquisitions we have done, both in the US as well as in Europe, have contributed multiple things in slightly different areas. So specifically, if you think about the acquisition we did in Europe with Dicomet, which is now Titomic Europe, where they brought in a machine portfolio, which we didn't have before, which is very nicely complementing the machinery we had as Titomic in Australia already. A great group of knowledgeable people out there, and most importantly, also existing customers, which they have been serving already, and which is now adding the revenue streams for Titomic overall, and where we can grow it.
And so following on from Dycomet, I know Titomic recently delivered its first commercial turnkey glass mold coating system. So does this open up a broader opportunity set for the company?
Absolutely, in a big way, actually. If you think about it, and let me give a few facts about the glass bottle industry overall. You know, the customer we are engaged with is a company called Vetropack. Vetropack is a very large glass bottle manufacturer, which has locations in Austria, in Switzerland, in Hungary, in the Ukraine, even. So that's a challenge right now for these guys. And they are part of an overall international network of other glass bottlers, which is called IBGR. Okay, these are multiple glass manufacturing companies which are aggregated together in an association which is called IBGR. Over the course of the last 3 to 4 years, even, we have developed that solution. Actually, Dycomet in Holland has developed that solution, and contributors to that solution is Fevisa in Mexico, a contributor is Gallo in California, but also Vetropack. And that solution helps these guys that they can use the molds longer than they can today without our system. Okay, that one thing is that we are running this machine right now. We just got it commissioned in the past days, and now we're going to execute on a defined plan with these, where we are creating the data and understand the real benefit. And as soon as they gave us the green light, we are trying to roll out the same solution to other members of IBGR, but also to other sites of Vetropack on their own. That's an important step, because each of these cases, we can sell another machine. We get the powder sales and the revenues going forward. And long term, if you think about it, what we are really doing is we are maximizing the uptime of molds used in many, many other industries too. So the glass bottle manufacturing industry is just one sub-segment where molds are used today. And if we can prove benefits in this area, that opens the door to an enormous market for us going forward, where we are maximizing uptime of molds. And molds are used in, I don't know how many industries, because that's the traditional way to manufacture parts.
And besides your larger models and the cold spray units, you've also been getting traction with your mobile D523 units for coatings and repairs. Can you talk us through the market segments that this opens up for you guys?
Absolutely, and the D523, and it's great that this product name is now communicated around, is our mobile unit. Okay, and it's a handheld unit, so a human operator take a spray gun and spray metal basically in a manual way, while a lot of the other machinery is using robots to move the spray gun. The D523 is our mobile manual unit. Now, certainly this can be used, if you think about it, because the system is mobile. You can bring that machine and do in situ repair of metal components. What I mean by that one, and we have a partner, for example, in Australia called Browntel, where they are going out to the coal mines and to the mining fields using that machine to, for example, do service and repair on fuel tanks. Okay, or we can repair other metal components out there in situ in the field without bringing basically the machinery back into a central logistics hub and do the repair there. So that's one thing. What you need to know is, and this is something everyone needs to understand it, the D523 has a certain specification when it comes to the speed we can achieve for the metal powder, to the pressure and the temperature. And that is limiting us to a certain set of metals out there, which there is a lot of business already for the metals we can handle, like aluminum, like copper, some nickel mixtures out there, which allows a lot of repairs. I estimate that just Australia, excuse me, has a need for 250 to 300 of these machines. Okay, but you easily can imagine is that in the future we are working hard to increase the scope of that machine in the next generation, where we can get faster, where we can get to higher temperatures, and with that one also it enables us to spray more metals, and with that one we are getting into new applications and even more customers in the future.
And this next question might be better suited for John. In FY22, you guys delivered a 7 times uplift in customer revenues, and with the various growth drivers that Herbert has talked about today, do you expect a further step up in FY23, and when do you think we can expect the company to turn profitable?
I'll leave that one with you now, John.
Yeah, we're certainly moving through into the commercialization phase of the business. Yeah, we've been a startup phase, which is, we've been generating and developing the technology for a number of years, and we're moving now into more commercialization. So last year's, in the FY22 year, as you mentioned, we have increased our revenue 7 times, and that's primarily because we've started delivering major machines. The first one that we delivered was to a research organisation in the UK called TWI, and that machine itself was worth about 2.3 million Australian dollars. So that's a big uplift, and that's the first one that we've got out there. We're also starting to sell those D523 machines, which is talked about, as well as providing other services to customers and more samples, which lead us to more businesses. So what's coming up in the future, we do expect our growth in revenue to continue. We've got a lot more opportunities out there now for D523, as we've talked about. That market is growing quite rapidly. We've also got expected revenues coming up a little bit down the track, but coming up related to the joint ventures as well. So the first thing that will occur for us is that we will sell machines to the joint ventures, and that will be further revenue. And then a little bit down the track, we'll also be getting revenue and profits coming back out of the joint venture operations once they're fully operational. So we certainly do expect a continued growth in revenues as we move forward.
And
So,
how much cash?
and
Sorry.
It's just to add on what John has said already. As I have mentioned, these 5 different revenue streams, you can expect that we are trying and we are growing revenue in each of these revenue streams. Okay, so more machine sales, more joint ventures, more glass solutions, more production out of the Melbourne office, and also on top of it, revenue which will be created by orders we will get from our resellers. As we just recently announced that the Repkon is also becoming a reseller for a certain geography. On top of it, we have a reseller already in India, and we are further expanding our network of the resellers working with us, promoting our solutions.
And how much cash do you have in hand, and what's your current burn rate?
Yeah, I'll address that one. We do have about just over $7 million in the bank at the moment. Our cash burn rate has been a little bit less than $1 million a month. So along with that, we've got some cash coming in related to some of the sales growth that's occurring. But as you can expect, we'll need to, and we are currently discussing future funding needs. We're looking to continue this business, and I think we've got an exciting business. So we think that as we move forward, there'll be investors out there that will be interested in putting money into the business. So we're certainly looking forward to spending this money. A lot of the money we've got at the moment will be spent on getting these joint ventures up and running, as well as continuing the cash burn rate. So as anyone can work out, we will be needing some more funds shortly, but we're coming up that commercialization curve, and break even from our point of view is not far away. It's not maybe in the next year, but it's coming up fairly soon.
As John said, the big story at this point in time is where we move from doing R&D trying to understand the technology, to move to engage with customers. We have a very clear understanding where this revenue is going to come from. We are filling up the funnel basically on the sales side to engage where this revenue, the customers which will place the orders with us. And so we have a very clear understanding what our solution is, what our value proposition is, and what these customers are. And this is what we are working right now, which is a totally different position we are in right now than we were a year ago or 2 years ago.
And final question, given the instability around the world right now, what if your plans don't work, and how will you mitigate that risk?
That's an easy and a tough question at the same time. Okay, so I would say, yeah, as a company, overall, Titomic isn't any different in that respect than any other company in the world which is doing business right now. Okay, there is a couple of uncertainties, which some of them you can foresee, some others you cannot. But at the end of the day, because we have a very balance on the revenue streams, even so if one or the other gets delayed for whatever reason, at the end of the day, we still can achieve the goals we have set ourselves by just accelerating one or the other revenue streams. The first point. The second point is also because we are now in a setup which is much broader than we had in the past, where we were operating just out of Australia. Now having Europe on top of it and having the US and the US team on top of it is giving us a lot more confidence than one or the other usually is always blossoming, to say it this way. And there is more opportunities for us now to create the revenue than if we only would operate out of Australia. Okay, and with the assets and the skills we have also in the other places, for example, we had a situation with the installation of DWI as a machine. Yes, supply chain length has gone up significantly since the beginning of the year, as many of you know, that suddenly, you know, transportation to Europe, which in the past was a 6 to 7 weeks exercise, can be now a 4 to 5 month exercise. A cost has exploded to transport things across the world. But at the end of the day, we found a solution also with our foothold in Holland, where they were contributing on the things which we originally had planned for to come from Australia, and we still delivered in time. Okay, in reality with a couple of days delay, but at the end of the day, it still worked out for the fiscal year overall. So yes, we have a certain dependency, and there are things which we can't foresee, but as usual, you have to go, if plan A doesn't work, you have to go to plan B, and you have to go to plan C, and at the end of the day, you have to execute on our plan. And that's what we are doing right now.
Yeah. And we have a question submitted from a member of the audience. They'd like to know, what percentage does Titomic make from the joint ventures?
So at this point in time, it's basically for fiscal year 22, it was 0 from the joint ventures, because we created the joint venture agreements, and the revenue then will follow in fiscal year 23 for some of them. Because of every joint venture is a large machine, like the machine of DWI, which was, as John said, 2.2 to 2.3 million this year out of the 3.5. So we're still going to see going forward that the joint venture revenue, establishing the joint ventures, will be a big part of our business, simply because the nature of the beast, that these are very much machines involved, which are in the millions of dollars, while at the same time we're growing the sales on the T5 to 3, for example, where suddenly the price points are much lower, but obviously the volume and the number of units makes it up. So revenue coming from the joint ventures will still dominate our revenue also in fiscal year 23, even though it was 0 in 22.
And I think the viewer that just asked that question wants to clarify. They'd like to know the % of revenue that you get from the joint ventures, not just specifically how much you have this year.
So as I said, going forward, what you're going to see, that the joint venture machine revenue will be more than half of the total revenue of Titomic in 23.
Yeah.
I'm not sure if the question relates to our share of the joint venture, because we're going into these joint ventures with around about 50-50. So we've got it's 51-49, but you can say it's about 50% share that Titomic has in these joint ventures.
Yeah, I think that's what they were wanting to know, the percentage. But
yeah, whenever you go into this joint venture, you want to have a dominant play, and you want to have a say in the joint venture, in the management of the joint venture. Okay, so we are operating as a starting point as a 50% share of the joint ventures. If this was the question, I misunderstood before.
Well, with that being said, thank you so much, Herbert and John, for joining us. We have one more question.
Yeah.
How long does it take to build a machine, and how many can be produced in a year?
A question which there is not an easy answer for. Let me try it this way. If you think about our machine portfolio, we are talking about machines like we delivered for TWI, which is a very big machine. Okay, it's a $2.2 million equipment out there. And it's same kind of machines will also be used in the joint ventures. To plan, to build, to install one of these machines is a 10 to 12 month exercise. Okay, for the big machines. At the same time, on the other end of the portfolio, as we have talked about it, we have the D523 and the smaller mobile units, basically to take an order from a customer, to get the components for the machine, to assemble the machine is a 6 to 8 weeks exercise. Okay, and that's what we are handling right now. Okay, there's the very big machines, which is rather measured in 10 to 12 months, and the small machines, which can be measured in 6 to 8 weeks, between the time we receive the order to the point when we are capable of delivering and installing the machine at the customer site.
Well, thank you so much for that. If there's any audience members that I didn't get to your question, or you have any further questions, feel free to email me and I can pass them on to John and Herbert. But thank you so much to you both for joining us. It was really, really great to learn about Titomic and everything that you are doing, and I look forward to seeing what the future brings for your company.
Thank you. Thanks for having us today, and I look forward to a follow-up conversation when we can report the next steps in the company.
Yep, thank you very much.
Thank you so much.
Thank you.
Thank you.
Have a good day.
Thank you.
Okay, bye.
Bye.